What's up, guys? Welcome back to DCA. So what we're going to do in this video is talk about one of the things that drives me insane about crypto YouTube, and that's price predictions. So these are commonly used as ways to attract viewers because everyone wants to know what price their altcoin that they just bought is going to get to, especially when we're in a bull market like right now. But the problem with these is that people often come up with numbers that have simply no basis in reality whatsoever. A lot of times you're going to find that crypto investors, especially those that are holding on to these assets in the hopes that the price eventually gets to these predictions that they heard, and we simply fall well short of that level. And so what happens is, like we saw back here in 2021, the market crashes, especially the altcoin market. And when it crashes, people are stuck holding the bag of this asset that they were probably at one point at a large profit on, and they find themselves sitting on a loss, shaking their head, not knowing what happened and how they got there. And it's all because these price predictions that people come up with are simply so inflated. They sound great. Ultimately, if the assets ever got to these levels, that would be great. But they come up with these numbers that are so inflated that it's simply not reasonable to expect that the asset gets to those levels. So what we're going to do today is come up with a method for identifying where various altcoins may be able to get to that's based in reality. So what I've done is created a machine learning model which helps us to identify where the altcoin market in general may be able to get to. And with that information, we'll be able to extrapolate that into various altcoins. So in this video, we're going to look at Solana. We're going to identify where at a peak level Solana may be able to get to in this market cycle based on this model that I've came up with. So if you guys are new here, what we do on this channel is take a data-based approach to analyzing the crypto market. There's no hype, there's no hopium. We just look at the data. We use a mathematical approach to understanding what's possible, what's reasonable, and what we might expect. So if you guys like this type of content, don't forget to hit like and subscribe. You could also head over to polaritydigital.io, where I run a site with Mark over at Upside Down Data. If you haven't checked out his channel, I also suggest doing that. What we do on polaritydigital.io is provide a host of risk metrics for assessing the crypto market in order to identify where are the best times to be entering and exiting the market. We have these risk metrics for Bitcoin, Ethereum, and about 50 other altcoins. So with that said, guys, let's do it. Okay, so this is the model that I've come up with. This is a machine learning model which helps us to simulate the cryptocurrency market. And so what do I mean by that? The parameters of this simulation that I've done are kind of looking at the next year of the altcoin market. Specifically, if we just actually come back to TradingView for 1 second, this is the altcoin market here, okay? This is total 3. So we're excluding Bitcoin and we're excluding Ethereum from the market cap of the entire cryptocurrency market. So this is essentially, this yellow line is giving us a look at the total value of the top 125 altcoins, excluding Bitcoin and excluding Ethereum. But that's not a very good metric. In fact, it's a very bad metric. And why is that? And that's because of the fact that there are stable coins in that calculation because they fall into the top 125 coins. So the total 3 metric on TradingView is actually, in my opinion, a very misleading metric. For instance, when, if you come back here to the market crash that we saw back in 2021 into 2022, if we just measured out how big was that correction, you would get a misleading number because, if we just say down to here, down to the bottom, it says negative 72%. That's because there are a huge number of stable coins contributing to the total 3 value. So if we really look at this from the perspective of the top that we made in November down to the bottom, it's actually much closer to 84% that we corrected, okay? So what I've done is I've excluded all of those stable coins from this calculation that we've done. All right. So I've come up with an alternative method of calculating the total 3, and you get a very different look and a much more accurate look at the altcoin market. All right. So that's step 1. I've used that inside of our simulation model rather than using this total 3 that comes from TradingView. So you'll see that this is a very chaotic looking chart here. What we've done is created a model which attempts to identify what the altcoin market might do over the next year based on a wide range of factors. Okay, so we've created a machine learning model which takes into account all of these factors. It looks at the historical data from the altcoin market. It looks at what the NASDAQ is doing, what the S&P 500 is doing, how the altcoin market reacts when Bitcoin is moving up or moving down. So it has this wide range of information. And with that, we're able to perform a simulation of the altcoin market. So what you're looking at here is not just one simulation. We're looking at 100,000 simulations of the altcoin market. And you get this wide range of possible outcomes. You could think of it like a multiverse. We're looking at essentially 100,000 different universes where the altcoin market from this day, where we're at right now, plays out, and how does it play out going forward? Maybe that doesn't make sense to you yet. Well, this is where we're at right now. Okay, so if you imagine this is today, this is 365 days in the future. This is one possible way that the altcoin market could play out based on all of the data that we have, right? So there's a certain uncertainty element involved in how the market plays out from where we're at right now. But you'll see that this is the model's prediction about how the market would play out over the next year. You'll see that this plays out kind of just like you would expect a normal market to play out. There's times where, we move up, we move down, we move up, we move down. All right. And I'll just play this forward a bit. Here's another potential market cycle based on all of the information that we have. Okay. So you could imagine this as being a different universe. Okay. So if you kind of look at this second simulation here, you can start to imagine how this kind of would play out. And this looks a lot like maybe that part of the cycle that we saw in the middle of 2021, where the altcoin market rose up, it kind of crashed, and then recovered in the latter half of the year. And here's a separate simulation. We have a rise basically through the first half of the year, a pretty big correction, and then another rally into the second half of the year. But then the market kind of crashes, and we head into the bear market at the end of 2024. So remember, this is 365 days we're looking at here. So we could go forward, but ultimately this is what we're doing. And I'm just going to kind of let this play through here. We're essentially simulating all of these different altcoin markets in order to determine what might happen in this cycle. Looking at these types of simulation models tends to give you a fairly good idea of what may happen in a market. What we've done then, instead of just, collecting this data here, we've asked what is the peak, what is the median peak of all of these market cycles. So we're not necessarily interested in what is the final price in 365 days. That's irrelevant. We want to know what is the market cycle peak if the market cycle peak were to occur over the next year. All right. So in this particular simulation, it hit around $1 trillion. If we looked at this next one, the peak occurred kind of in the middle of 2024. This hits about $2 trillion. And this one hits probably close to around $3 trillion. So that's kind of how this model works. We're looking at a huge number of simulations, and then we're going to use the median level. So that's how we're going to come up with a base case for where the altcoin market might be able to get to in this cycle. Now, we have this adjusted stablecoin market. We have our simulation model. So now let's talk about what the results were. So specifically in this video, we're going to look at Solana. So the median value that we came up with for this market cycle. Now remember, we're sitting here at around 570 billion. And if you look back here to last cycle, the peak for the stablecoin adjusted total 3 market cap was around 950 billion, right? And in the prior cycle, it was about 300 billion. So we did about a 3x in the altcoin market from peak to peak. Now, this model tells us that we actually have around a $2.1 trillion simulated adjusted altcoin market cap median. All right, it's a lot of words, but what that means is if we just come back here to our model, the median max level in the next market cycle, so the upcoming market cycle, and remember, when I say max, We're not talking about where we finish out here. What we're talking about is if we just play this back kind of from the beginning, remember, this is the max level in that simulated market. This is the max level in this simulated market, and so on and so forth. This was the max level in this simulated market. Because ultimately, we don't care where it finishes the year or a 365-day period. We want to know, where is the peak level for this market cycle, right? Because that's ultimately what people are chasing, is the peak. Where's the peak going to be? No one ever talks about, where did Bitcoin finish up at the, December 31st of 2021. They talk about that November 8th where we hit that 69K level. So peaks are kind of how we're assessing where this market cycle may be able to get. And this simulation model tells us that $2.1 trillion is where it expects us to get in this cycle. Now, if we run that as a percentage change from where we're at right now, that would be around a 260% increase from where we're at right now, okay? That's an additional $1.5 trillion that we would add into the altcoin market just from where we're at right now. So that means there is a lot of way to go left in this market if this simulation model that we've played out turns out to have any bearing in reality. When we look at this data, though, we don't want to just rely on a single number. We don't want to say that median level is, that's the gold standard. That's exactly where we're going to go. So we're going to look at a range. We have down here to the 25th percentile range, and that puts us right at around 1.75 trillion, 1.7 trillion. At the 75th percentile, that puts us at 2.75 trillion. Okay, so we basically have a $1 trillion range. And we'll use that, we'll use the median level to kind of make our base case prediction for Solana and other altcoins in future videos. At our base case, we'll use the median, but we'll also come up with a range because, we never want to come down hard on one specific number and say, hey, it has to get to this number. We're going to be deterministic about this. That's never something you want to do when it comes to financial markets, because there is a huge number of factors influencing the market. So the best strategy tends to be one where you have a range that you're looking for, and not just one where you have a specific number and you've just decided in your head that, hey, I'm not doing anything unless I just get to this number. So having this range allows you to do things like, maybe I'll start selling a small amount once I get to this 25th percentile level, then more as I get to the 50 percentile level, right? All the way up to the 75th percentile. So we know where we're expecting this altcoin market to get to, and that's $2.1 trillion. So how can we apply that then to an individual asset? All right, so let's start by looking at this then. What we're looking at here is the altcoin dominance of Solana. And when I say altcoin dominance, I don't mean the dominance of the entire market cap. I don't mean the dominance of Ethereum and the altcoins. I mean Solana's dominance of only the total 3 adjusted. And remember, the adjusted means we removed the stable coins. And what you find is that when we remove those stable coins, we can come up with a value that currently puts us at around 11%. So 0.11 is 11%. All right. In last cycle, its dominance got up to around 8%. And so far, at a peak, we've got up to around 13 to 14%. All right. Now, what does that mean? So I've brought up another chart here, and we're looking at Cardano's coin dominance. And why am I looking at that? It's not necessarily because, it got up to this 13% level, although that could be relevant. So let's keep that in mind. It's not necessarily because of that. I've pulled this up because I want to show you the potential behavior that an altcoin could demonstrate inside of a market cycle. Because ultimately, when we're looking at this here, there's a lot of variability in how this plays out. But one thing that we tend to see is that the stronger altcoins, and in last market cycle, Cardano was one of the stronger altcoins. It had a fairly high market cap ranking pretty much throughout the cycle, right? But what we saw was that it, gained in strength, it decreased in strength. And remember, we're looking at this relative to all the other altcoins. What percent of all of the other altcoins, not including Bitcoin and Ethereum, is made up of Cardano? And, if we look right here, it was around 2%, then it got up to around 5%, then down to 3, ultimately spiking up to around 14 to 15%. So what we see though is as that market cycle really kicks off and things really get going, the stronger altcoins tend to continue to gain strength. They continue to gain market cap share against other weaker altcoins. So what we can say then is if this market continued in a positive direction, we would very likely expect Solana to continue to grow its market cap. So, we're kind of in undiscovered territory here though. So we're sitting right on this precipice where we're at around between 11% and 14%. So its high is at 14%. So, we're going to be conservative. Let's say that, just for argument's sake, let's say that Solana kind of got back up to this 13, 14, 15% level, and we'll just call it 15% just for argument's sake. And we'll say that's kind of where Solana is going to kind of reach its peak at. So 15% of the altcoin market, this total 3 adjusted altcoin market. So with that information, if we expect a dominance level for Solana of around 15%, that's a conservative estimate. And we then have simulated the altcoin market to peak out at around $2.1 trillion, we can come up with numbers then. And so at a 15% dominance level, at that peak market cap, that would give us a $315 billion market cap for Solana. Okay. If we only got to 10% dominance, which is where we're at right now, that would give us a $234 billion market cap at that time when we hit our peak. And so if we look at that in terms of percentage change, that's around a 400% increase to the peak. Or if we kind of didn't reach to those higher levels, that would be around a 250% increase. That's in terms of market cap. Market cap, as we know, can be a very misleading statistic in the crypto market. And that is for the fact that you have to take into account the total supply, right? So of course we've done that. Okay, so in this calculation, I've accounted for the expected increase in the supply of Solana. And I'm not going to go into all that. I've actually talked about that in a separate video, but we essentially know the increase in supply, so the inflation rate of Solana, and we know the token unlock schedule. So we're able to account for that and to estimate where we would be with a a fairly high degree of accuracy if we assumed a 1 year period from now, how many tokens would there be? So we've accounted for that in this calculation. Okay, so what we have here is the price of Solana right now in orange. And in addition to that, we have these predicted levels then. And remember, we said we're going to predict the median level of the price analysis model for the total market cap adjusted. We're going to predict the 75th percentile and the 25th percentile. And so it turns out $675 is the median level for Solana in this cycle, given all of those different factors and the several assumptions that we've made. $860 is the 75th percentile price prediction using this model, whereas $540 would be that 25th percentile. This is all assuming that Solana were to achieve that 15% total market cap dominance adjusted for total 3, and that the market cycle continues in a bullish trend. So what are some invalidating factors for this model? If the stock market begins to crash, any of these kind of things that are unforeseen factors, these would kind of invalidate this model, right? Because we are making the assumption that we're in a bull market right now. If we are not in a true bull market, well, none of this, obviously, I don't think anyone's expecting Solana to go to $700 if we're not in a bull market, right? You need the bull market conditions in order to actually achieve these levels. So I'm not sitting here telling you that these values are going to happen. I'm telling you that if we are in a bull market, if the market demonstrates the same types of behaviors that we have in previous bull markets, like we've seen in 2011, 2013, 2016, 17, 18, back in 2020 and 2021, if we see characteristics similar to those market cycles where we're demonstrating diminishing marginal returns, where the market is going to have these parabolic phases where the stock market continues to rally. If all of these things happen, then you are looking at a model which I believe should reflect what happens in this market cycle. Now, there's a huge number of factors that could invalidate this. So, primarily those are anything that sort of stops this market cycle dead in its tracks. And remember, the model here is really predicting the altcoin market. Solana is one individual asset in that market. And therefore, something like Solana crashing, going down again, if we had many more outages of the Solana network, those types of things, those could all invalidate this model. But if the market cycle continues to move forward, the stock market continues to go well, I believe that, these numbers are very realistic. We've done a separate video on Solana and where its potential peak could be in this market cycle using a completely different framework. And what I find to be very interesting about that is that these numbers reflect the kind of the base case scenario that we came up with for judging where Solana could get to in this market cycle. And these two different types of analysis that we've done, and you can watch that video, is probably made about a month ago or 2 months ago, using a completely different methodology, but the results were very similar to this. So, I like to look at things from different perspectives. I think when you have multiple pieces of evidence pointing to the same conclusions, that tends to strengthen the argument for the case that you're making. So $675 at our base case, up to $860 at that 75th percentile level, and down to $540 at that 25th percentile prediction level for the total altcoin market adjusted. So that's going to be it for this one, guys. I know it's a kind of heavy video, but I think that ultimately this kind of thing is going to give you a much better chance at gauging where the potential for an asset is than just listening to someone who's taking stabs in the dark and making up numbers, saying $1,000 Solana, $2,000 Solana, whatever it may be. This is all based in mathematical principles of the cryptocurrency market. And I'm going to rely on that every single time over someone's opinion. So that's it for this one, guys. Until next time, as usual, see you.